Hey guys, Mikey here with the first video of the advanced training series. Okay, if you haven't already done so, we're going to be using TradingView in this video. So if you haven't done so, please go and visit the pinned post of the paid group and watch the first few minutes of the live Q&A from the 1st of June. That's basically your homework on getting to this preparation stage. Okay, so what we're going to be doing today is I'm going to show you guys how to use multiple time frame analysis, because we're getting to that point in the market with the basic strategy where new levels are being hit, the retracements are coming back and so forth, and I need to show you guys how to take advantage of short-term time frames and then also long-term time frames for your extra buy orders in case price comes down to a lower order. Okay, so what we're going to do, guys, is for this instructional video, I'm going to be using Ripple XRP because it's a very good coin to show you guys exactly what I'm talking about. Now, in TradingView, you should be able to already do this, but if not, you go up here and you add your symbol in. Okay, so type in XRP, look for XRP BTC and make sure you choose the Poloniex one. Okay, XRP BTC, and this will give you this chart here. Now, from a long-term perspective, guys, we want to do a top-down approach, okay? Because the higher the time frame, the more relevant that time frame is. Okay, so the more important that time frame is, if we use a longer time frame. So generally, what I do is I start on, say, a weekly time frame, and I'm going to draw some fib levels on here. And to get your Fibonacci retracement tool on TradingView, you come down to this area here, and if you click on the side here, it'll probably be on Pitchfork to begin with. You can actually go down to Fib Retracement, okay, and how we draw a fib retracement is we go from a previous low to a high. Okay, so this is right back from mid of March when price was around about 400 and something. So if I draw a fib from here, which is the low, to the high, which we completed, okay, so we got to this high, and then price started to retrace. So if I point and click that, so you click down to the low, you click to the high with your 0%, so 100% is going to be at the bottom in this one, and the 0% is going to be at the top. Now, the reason why this is reversed as what Poloniex shows is Poloniex actually draws a Fibonacci level, not a Fibonacci retracement, which is what we want. Now, I didn't want to confuse you guys at the beginning because obviously that would just be well over your head, and we don't really need to go into it at the beginning, but these levels are actually kind of reversed. So from the up move, the retracement here, so 61.8 on Poloniex is really a 38.2% retracement, okay? The 50 is obviously the same because it's 50%. 38.2 is really the 61.8 retracement, and so on down the line, okay? Now, the reason why we want to use the top-down approach is because if you saw this weekly trend, okay, happening, and I'll take you guys down to, let's go down to a daily chart, okay? So you can see market structure-wise, over a longer period of, as you go down to lower time frames, it shows you a different picture of what the market is doing. Okay, so on the weekly chart at the moment in cryptocurrency, we're only really looking at the last few months because before that it was extremely stale. But as we move forward down the track, 6 to 12 months, the weekly time frame, and eventually we're going to start using the monthly time frame, okay? But it's not relevant right now because there's so little data that we have to compare that the highest time frame you want to use is the weekly. So to draw the fib, you go from low to the high, okay? And as you can see on the daily chart, we've come back down and we've tested into our good value area to buy. So we could have been buying at these opportunities in here with our buy orders, okay? And if we go down to, say, a 4-hour chart, if we go back, so to zoom in and out on this, guys, is just your mouse wheel, forward and backwards, okay? So if we pretend like nothing past that point has happened, okay, and all we can see is this picture here. All right, so we'd draw from the bottom to the top, and then we'd be looking at good buy areas, around our fib levels. So we'd be looking at our good buy areas, you know, around about from 50% and lower. So 50% would be our minimum entry, and then lower is our good value areas, okay? So as you can see, price came back down here, came into our good value area, and then started to take off again. Now, why you want to use multiple time frame analysis is technically what's happened here is this Fibonacci move, okay, this Fibonacci retracement is now completed, okay? From a short time frame perspective, this has made its new high, and it's retraced, it's hit our retracement levels, and then price has started to take off again, okay, up here. So that means that Fibonacci retracement is basically, realistically, it's done, okay? So we don't really need to worry about that at the moment because our market is going to continually keep stepping up over time. So what we would then do is we'd look for our new high to be reached, okay, which would be here. So we'd grab our Fib retracement tool again, and we go from, you know, we'd go from our low, we'd go to our high, okay, and then we'd be looking again from a short-term perspective. We'd be looking again for retracements back down to at least the 50% level, okay. Any lower is much better, okay. Any lower is much better. And then price took off again. So what we'd be doing as market steps up again, we'd grab our Fibonacci retracement tool again. We'd go from our low. We'd go from our low, okay, and we go up to our high again. Okay, and then we'd be looking for buys again below the 50% minimum and lower, comes into our good value area zones. Now, obviously, the more price moves up, the greater retracement that can happen. Okay. Now, if we look at that from a short-term perspective, so that's only using the 4-hourly charts. Okay. So if all we used was the 4-hour charts, we could go, yep, buy here. You know, we sell at our previous highs, and then we keep some coins for new all-time highs. We get a new all-time high, price comes back down, we buy again more. We do the same thing. We set our orders on the way up. You know, we keep some coins for new all-time highs, and then this big sell-off happens here. Now, where your longer-term time frame comes into play, as opposed to just looking at, you know, on Poloniex, just looking at your 2-day or 4-day or weekly or whatever, you know what I mean? What we do on here, guys, is from a weekly point of view, okay? Now, we've had massive moves come into the market at around about, you know, this is from the 400 level. So you can either do, we can get rid of these. If you want to get rid of something, you just right click on it, and there's a remove option, okay? And there's a remove option. Okay, we remove. Now from a weekly point of view, you can see that obviously each one of these candles represents a full week, okay? A full week. So if we grab our Fibonacci retracement tool again, now technically this move has completed. Okay, we know that move has completed. So what we want to do is we want to take our Fibonacci from this point here, from our low, to our new high, which is all the way up here. Now, as you can see from a weekly perspective, guys, what you're aiming for, okay, what you're aiming for from a long-term perspective is you're looking for a price correction back to the 50% or lower into those value areas. So you can see from a long-term perspective, price has come back down. It's reached our 50. It's reached our 61.8, which on here is a 38.2. Okay. And then we've almost reached the next level down, which is this one down here, from a long-term perspective. Okay. Now the reason TradingView is much better to use instead of Poloniex, especially for the advanced stuff, is obviously because with this, you've got to kind of, you know, move the chart around a bit like this. You've got to try and, like, if if all we did, if we didn't move this at all and we had it on 1 month, it's only showing us from the high down to the low, which is the wrong way for our fib to be. So you'd actually have to move this chart back for it to automatically correct itself and then come back up. Okay. Now, if we take a look at this long-term chart now, if we filter through down to the daily, you can see from our low, okay, this is our fib from previously that's already worked itself out. Okay, this one's already completed. Now we're looking for the next high. Now, as you can see, obviously on a daily chart, we'd be going from this move to this level here. Okay, because that is technically our new high. So from a short-term trading perspective, we draw another one from here to here. Okay. And you can see this has come back down. It's tested our 50 and then it's gone back up. So then from a shorter term frame, we draw one now from this point up to the high. And I'll do that now because I'll show you the difference in what your buy levels are going to be. So remember, this is the weekly time frame, guys, that I've already drawn in there. So this one is technically completed. So we go again from our low up to our high. Now you can see the difference in price here, guys. Okay, so as you're using the shorter time frames, the price is squeezed more. Okay, and then if you're looking at the longer time frames, the price gap is much larger. So what I do with my multiple buy order strategy is I utilize both time frames. So I utilize a lower time frame. So for example, if I saw this trade sort of on the daily chart or the 4-hourly chart or something like that, okay, what I would do is I would be setting some buy orders. I'd be waiting for price to come back down into, bare minimum the 50. Okay, if I wanted to take orders there's nothing wrong with taking orders there. I generally wait till below the 50 myself personally. Now, this is the start of the good value area. Okay, so from a short-term perspective, if you bought around this point and lower, you're getting in at good value. Okay, good value from there. But from our long-term perspective, you'll notice the start of our good value on our short-term time frame is only our minimum entry criteria on our long-term time frame. So what we want to do, guys, is we want to set our buy orders, multiple buy orders, to take advantage of both time frames. Okay, if you want to get into the market, obviously there's nothing wrong with getting in on the shorter term time frames, but you still need to be aware of the longer term time frame and what can happen. So from our long term time frame, you'll see that we've actually come down and we've come into our good value area. So from this point, from the 618 and below, is actually the 38.2 on Poloniex side. So that's our good value area. So anything below that is good value. Now you can see below our good value area, we could have hit some good buy orders there, and price took off again. I've hit sell orders back up to this point, back up to this 14,000 level, and then price has come back down again, back into the good value area of the long-term time frame. Okay, so I've bought coins again. So I bought around about this 10,000 level, 11,000 and 10,000 level, and I sold coins up at about 14,000. So I made about 30 to 40% on those coins. And then prices come back down again, and I just rebuy more coins. Okay, I can use the same amount of capital if I want, but it means I end up with a lot more coins. Or I can use the same amount of capital I used previously, and then keep my profits and use that in another coin. So that's the basics of multiple time frame analysis, guys, and your Fibonacci levels, because we're starting to get a lot of questions about that, and it is going to change over time, because as I said, the last few months in crypto trading is really the main data that you want to be focusing on. Okay, so we don't really you know, from like, you know, mid last year and all that sort of stuff, majority of the coins were at pretty lowish values. There's no point in really going way back, because majority of the new market and the boom and all the money coming into the cryptocurrency trading recently has been from the last few months. So you'll notice, you know, there's been $500 million to $1 billion in market cap coming into the market every single day. So what that means is our coins are going to step up. So we're going to get new high, we're going to get some retracement, okay, and then we're going to get new high, we're going to get some retracement, we're going to get new high, going to get some retracement. So 2 steps forward, guys, 1 step back. That's what the Fibonacci retracement tool basically does for you. So I hope this makes sense, and I hope you've enjoyed this lesson. Again, guys, if you have not done if you're not 100% with the beginner course yet, please don't watch these advanced videos, because all they're going to do is impact your performance and impact your learning, and they're just going to confuse you. So once you've 100% on the basic strategy and you've got that down pat and you understand everything completely, you know, that's when you step up to this advanced video. So if you've watched this advanced video and you go, whoa, I don't even know what this means, what this is, there's probably a good chance that you're not fully finished with the beginner series yet. So go back and revisit the beginner series. Otherwise, I hope you enjoyed this video, guys. This is the beginning of the advanced trading series, and I'm sure we'll get many more questions, and we'll go over a lot more in the live trading sessions with this. Thanks, guys.